more opinion, right? And Rahul Chadha is now with us, founder and chief investment officer at Shikhara Investment. Rahul, great to have you back on the program. Good morning. Thanks very much for your time. So there is at the margin some relief. The question is this, with regards to tariffs specifically, is this a tactical relief, or should we assume what has happened with Canada, Mexico as a playbook for things to come in terms of how these things will work out? Sound tough and big and then roll back when you get what you need. What's your sense?
Yeah, so again, our view was that this time is different from 2018. 2018, US didn't have an inflation problem. I mean, if you see last year, Democrats got voted out despite a very strong economy because of the inflation issue. And so I think the Trump administration clearly realizes this, which is where all the noise, all the rhetoric you see on tariffs is basically escalate to de-escalate. I remember I was talking to people yesterday and people were like, we've got 24 hours to go, would this happen? And we saw this early this morning, Mexican president promising 10,000 troops to guard the border. And the same thing got repeated with Canada. So I think there is a call or there are interactions scheduled with the Chinese authorities in the coming days. And the hope is all these tariffs come with a lag, basically, and some solution is going to be found out. And our sense is, look for China, it's going to be do or honor a part of the deal from 2018-19, buy some of the goods, sell part of the TikTok business, which is in US. And again, at the end of the day, the administration here wants to leave a legacy. President Trump wants to leave a legacy of a strong growth rate. So I don't think they do anything significant to derail the story. But yeah, there is going to be a lot of noise, a lot of bumps along the way.
Absolutely, and that's what we're sort of looking at. I wonder how these days, brokers and analysts are writing their notes. By the time you start analyzing what happens to the tariff or what the numbers and the implications could be, it's gone. So, yeah, I don't envy their jobs at all. Rahul, so let's talk about the big story here at home, the budget and what it's meant for the market. And, just before we said hello to you, I was reading out a note from Goldman Sachs where they were talking about the spare trade, because that's what this market's trying to grapple with. That do you sell down your capex stocks and you start loading up on consumers, and if that's just a short-term trade, or is that a tactical change in the portfolio? Where do you stand on that?
Yeah. So we're going to be far more discreet about what we buy in the consumption space. Say what we like there is autos, what we like is hospitality, hotels, travel, tourism, etc. So I think these are the spaces. There are parts of consumer staples where if you see the valuations are still expensive, these names have pulled back about 20-25%. But look, historically, these names used to trade at 25-30 times until 2014, and then the multiples got expanded to 60 times. I think with the kind of growth we've seen over the last couple of quarters, these names are going back to 35 times. There are categories like paints where competitive intensity has gone up, value retail, competitive intensity is very high. Same with quick commerce. Some of these names, particularly the mature categories, are going to see their multiples contract. So we would not really kind of jump into buy those names, be selective about buying consumption. On your industrials part, I think somewhere around again, probably March, April, you'll get good entry points for industrial. See, the fact of the matter is we've not seen an investment cycle for last 10 years. We get the point that, look, the central government capex is going to plateau around here, having grown significantly over the last 3 years. But state capex is going to pick up, PSU capex is going to come, private sector utilizations are still 78%. So that capex is going to come. And a lot of the Indian industrial companies have now also got inroads into global sourcing programs. So you will see that story gain traction in the coming quarters. So we'll take this pullback to buy industrials. Hopefully you get it 15-20% lower.
All right. Hi, Rahul. Good to hear those thoughts. Well, an optimist on industrials, which have been a little bit off color, but you're saying it could be providing a good entry opportunity. What else has underperformed in the recent past has been the big banking names and the big boy Reliance Industries as well. Post this recent underperformance, do you believe it's a good time to get into these names?
So let's start with the Reliance first. See, I think significant value for Reliance comes from retail. And what we saw was clear struggle for the company in retail. They shut a lot of stores, etc. I think that is getting fixed. Hopefully, in second half of the year, we'll see some concrete actions on their new energy plans, and I think that's likely to excite market. It's a mega cap stock, so it's kind of a function of FI flows into the country. Our view is that Q1 onwards, you're going to see investors move out of US into international equities, into EMs, etc. Clearly, there was a lot of this complacent attitude about US exceptionalism. With the chaos we see here locally, I think those things are going to be questioned, and as a result of which, people would go out and see the rest of the world, particularly emerging markets, Asian markets, where valuations are much attractive, where you have fiscal prudence being followed. So I think that is going to be appreciated by the investors in the coming quarters.
Rahul, I mean, markets, up phase, down phase, there are always stocks, if you identify correctly, which will make you money. With full disclosure, I mean, why don't you run us through 3 or 4 names which you think are very attractively poised after the correction that we've seen?
Okay, so I think some of these kind of an IT services name is something we like to have. If you look at our portfolios, our regional funds would have something like a Cognizant Technologies that's not participated in the rally, trades at 15 times earnings. We discussed about bank in the previous question. I think things improve for banks from here. Similar to Reliance, that's a sector that bore the brunt of FI selling. There was also a pressure on the NI growth because all these guys were somewhere scaling back on their unsecured loan exposure. So as that normalizes, you'll get NIMs kind of a stabilize. You'll get NI growth about 15%. Earnings growth are going to be 15 to 18%. And to be fair, 18% earnings growth for next 3 years. I mean, anybody would take it. So that's something one would like to have. One would be still careful of expensive small to mid cap names. See, they had a one-way rally over last couple of years, and again, nobody could understand what was happening in these names between, I would say, Jan to whatever, somewhere August, September of last year. That is going to unwind. We've seen part of that unwind. I won't be surprised if these names correct another 15-20%.
Another 15-20%. In banks, do you have a preference, Rahul?
I think the large banks, the ICICIs, SDFCs, clearly should benefit here.
Okay, all right. Rahul, thank you very much for joining us. Good speaking with you as always here, and hope to see you back soon. So that's a good conversation and some interesting perspective as well. Let me